Many options traders face numerous challenges when getting started. Here are the top 10 most common problems options traders have and how to solve them from day one. Getting things kicked off is, what are options? So you have the stock market and you have the options market. They're different things. So you need to understand that when you trade stocks or you buy and sell shares of a stock, you are doing that on the company itself. Options contracts are a derivative of the stock market, meaning they're a secondary kind of trading tool that's different from trading individual shares. These are contracts made up of 100 shares of stock, and you can either buy them or sell them, and they're also made up of what's known as calls and puts. For additional information on calls and puts, check out other videos in my channel here, linked right there, and it'll show you what's going on with that. Now, how do options work? Well, when you buy an options contract, you are buying the right, but not the obligation, to either buy shares at a predetermined strike price before an expiration date that you and the seller agree on, or you are buying a contract to then be able to sell shares at a predetermined strike price within that same expiration date. Okay, it's a contract that is agreed on between the buyer and the seller. You can buy them, you can sell them. When you sell them, on the flip side, you are taking on the risk of potentially having your shares called away or having to buy shares at a predetermined price, all governed by that strike price and before that expiration date. So there's buyers and there's sellers making a deal, making a contract, shaking hands. Thank you very much. That's how option contracts work. Number 3, what are the different types of options trading strategies? Well, you can go super bullish and be a call buyer, where you have to get the direction of the stock right, and then you go ahead and you buy calls or you sell puts. You can be what's known as kind of a volatility trader and kind of make combination trades where you're kind of positioning a call and a put together, or a couple calls and a couple puts, or vice versa, and you're kind of making these combination kind of trades, which is a little bit more advanced. Or you could go ahead and do something very, very simple again and just be a very passive covered call seller, which is where you sell covered calls on stocks that you already own. So there really is a options trading strategy for everybody out there. If you want to go big on risk, you want to get into the game and go bullish, you can do that. If you want to play it safer, do a little bit easier, you can do that through covered calls. And if you want to go ahead and just make it a volatility kind of scalping kind of mission, you can do that through combination trades and trades that focus on volatility. A lot of people, when they get into options trading, don't understand the risks involved, and there are a few you need to be aware of. Number 1, when you're in an options trading account and you're using what's known as margin, if you use margin and you're using more money in your account than you actually put in, if you put in $10,000 but you trade up to $30,000, you're using what's known as margin or borrowed money. When you do this, you are taking on unnecessary additional risk, in my opinion, and I've been burned by this before. I had half my account wiped out in one single day during a crash, and this is because I was using margin and trading irresponsibly. Now, it may not be irresponsible for you, but for most beginner traders, it is using margin. When you do this, you take on additional risk, and if the stock market goes against you, what the stockbroker that you use can do is sell off your positions at their own will to limit the amount of risk in your account. So if you're going to trade with margin, make sure you understand it. Number 1, that's one of the biggest risks you can have. The other one, for me as a beginner, is just not understanding how the options contracts work. I've been there where I'm buying a call when I should have been selling it, or selling a put when I should have been buying it, and not understanding the difference between the calls and the puts, how they work, and just the general strategies overall. So when you're a beginner, the biggest risks for me are margin and not understanding how options work. If you're buying options, understand what has to happen for this to be profitable for yourself. If you're selling options, understand the same things, but it's going to be reversed from the buyers, and understand what has to happen for you to make money. Next up, I see a lot of people asking or struggling with how to read the options chain. What is the bid-ask spread? What is a strike price? What are the expiration dates? Well, a bid-ask spread, those are the big 3. A bid-ask spread is just the amount that the buyers are willing to pay and the sellers want to get paid in order to make the contract go live. And this is just a kind of handshake deal. Most of the time it meets in what's known as the mid price, which is right between the bid and the ask. And there's an agreed upon price there at the middle point. So the bid, again, is what the buyers want to pay. The ask is what the sellers want to get paid. And usually the contract price falls somewhere in the middle. What strike prices are is the actual price that the contract is struck at. So when you're buying a contract, let's say you're buying a called contract to purchase 100 shares. When you do this and you select a strike of $50, you are agreeing to buy those shares at the strike price of $50. And this is different than what the stock price is. The stock price might go all the way up to $100, but you're still going to be able to buy those shares at $50, which then you'd go ahead and turn around and sell them on the open market and make a nice profit. So that's the strike price. Then you have the expiration date, which governs the contract length. Options contracts only exist because they have an expiry date. If they didn't, they could go on forever and the contracts wouldn't really have much meaning. Because they do have an expiration date, it gives it a time by which an action has to happen. The stock has to either go up, down, or stay the same by the defined expiration date, and that is the last day that the contract is valid for. So if it doesn't work in your favor coming up to that expiration date, you can see when the end is near. You can make different kind of calls if you want to get out of position, enter a new one as kind of protects some downside risk. You can do that because you understand the expiration date is when the contract itself expires. There is also a concept known as volatility, and volatility in options trading can either make or break your trading account. If you don't understand how to harness volatility and you're buying calls, you can get run over pretty quick because you could be going in the right direction with the stock, but the volatility crush can still wipe yourself out. If you don't understand volatility, make sure you check out this video right here, right in the card there, just to show what it is and how it works in options trading. Basically, Cole's note version, volatility is kind of the amount of unnecessary risk or fear in a stock, and it is baked into the options contract. If there's something like earnings are coming up and there's a lot of unknown, the stock and the options contracts will kind of be on edge and there'll be a lot of potential movement. When this potential movement is removed or sucked out of the market, that's when you have a volatility crush and things get back down to normal. When there are times of high volatility, there's going to be a lot of extra premium, or things are going to go up in value more than they normally do, because there's unknowns, there's risk, there's potential for movement in the market, and people have to be compensated for that accordingly. Another thing people kind of wonder about at the beginning is what kind of pitfalls right at the beginning of my trading account do I want to avoid if I can? And the big ones for me are understanding how to get your account set up properly. Whatever account you choose to use, make sure you understand how it works. Paper trade your trading strategy first before you do anything else. If you don't paper trade and don't understand what you're doing, you are setting yourself up for a ton of pain and long-term nightmares. Don't do that. Paper trade it first. Get your kind of strategy under your belt and move on to some real trades. Next thing I would say is that you want to understand what your strategy overall is. You want to have a defined strategy. If you don't have one as a beginner, that's okay, but understand you want to be looking for the same setup over and over again. The more kind of systematic you can make your options trading, just like your stock investing overall. If you can make a system that's repeatable and scalable, that gives you the best odds for success because you know what you're doing, you know what you're looking for, and you know how the market is supposed to respond. Sometimes it still won't, and you still kind of get knocked out of your position. That happens, just the way the market goes. You have to take some losses with the wins, but the more wins you can find and the more setups you can find that are part of your strategy, the better off you'll be long term. Those are the two kind of big things when you're getting started that I think you need to look out for in terms of what are the kind of biggest risks or make mistakes to avoid. And the best resources, number 9, that we want to look out for when we're looking at options trading, there's a whole bunch of free ones on the internet. I like to use Yahoo Finance for my financial kind of news and options kind of background data on the companies. I also look at CNBC for the news myself. I know that there is a website called finviz.com to give you a quick heat map of where the market is going. I like to use TradingView for my own charting skills, Interactive Brokers for my trading platform, and then if I want to get more information about how options are moving and how options are working, I have taken a couple trading courses myself. There's lots of people on the internet looking for kind of students and people who want to learn how to do this. There's free information on Investopedia. There's lots of free kind of tutorials and webinars through different platforms, Thinkorswim, Webull, Interactive Brokers. They all have their own kind of trading kind of academy. There's ones Warrior Trading, Bull Bear Trading. There's tons of them out there on the internet. I've gone through what's known as Theta Trading here in Canada, which is a really sharp program out of Burlington, Ontario. They were great, and they gave me the kind of the leg up for what I needed to get started in options trading. Plus, you can also look at podcasts. You can look at books. Some of the best books that I've seen for options trading. Number 1, Lee Lowell, Get Rich with Options. Awesome book, goes through covered calls, buying calls, selling puts, kind of the big 4 strategies that most options traders use. Lee Lowell, Get Rich with Options, awesome book, amazing kind of author and good teacher as well if you want to look for somebody kind of to mentor you with options trading. Lee Lowell, great news. Street Smart Guide to Beating the Stock Market is another one. That is just a technical analysis masterclass. It talks about support and resistance. It talks about technical analysis. It talks about how options work and when to use them. There's also a great book, Getting Started with Options. I think it's Michael Thompson who gets that one. He is just kind of a breakdown of a mathematical kind of basis on how options work, volatility, historical volatility, implied volatility, options pricing, all the Greeks, data, throw, row, Vega, whatever it is, theta, delta, you name it, it's in that book. And if that kind of doesn't ring a bell with you right now, you don't know the terminology, that's okay, because you will one day if you kind of go down this rabbit hole of options, keep learning. Plus, there's a whole bunch of stuff on YouTube, just like this video here on my channel. If you want to know more and learn more, you can do that here. I talk about Interactive Brokers, talk about TradingView, talk about stock options and strategies. If you want to get started. You can subscribe to the channel if you got some value today. That would be amazing. I would so greatly appreciate that, but only if you got some true value, you want to learn more. If you didn't, that's okay. We'll see you maybe on the next one. But the last thing here I want to say is that if you want to get started with options, the best way to get started is just kind of go in full on commit and get that paper account set up. Start practice trading from day one. Get your feet wet, get the kind of hand in the game and understand how the mechanics of it work. If you don't have all the information already, that's okay. Okay, you don't have to get everything 100% ready to go before you jump into this if you're not using real money. If you're using real money, then yes, you want to understand things to a greater detail and a greater level. But if you're using paper money and using kind of a risk-free trial account, get started, open your account, go through the steps. You can set up most accounts in under 2 hours and get started, get trading right now. Markets open from 9:30 till 4 every single day aside from holidays. Get in there, understand, make some mistakes, get your feet dirty, and get started on your options trading journey. Even if you're a beginner, here are the 10 things to avoid. Hope you enjoyed this video. If you did, please give it a like and let me know if you like this kind of new content for the channel, this kind of different style that I tried to use for this time, just to change things up a little bit and try something different. If you like that, let me know in the comments. If you didn't, that's okay too. I go back to my old style of kind of making more interactive brokers, trading view kind of tutorials. That's totally cool. Let me know what you think, and hopefully I'll see you on the next one.